Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today I'm joined by Catherine Allfrey from WaveStone and Emma Fisher from Airlie Funds Management. And we're talking about those stocks that have been rocketing, the ones that we all love to be on. Can they keep going? Start with you, Emma.
Yep.
Gold's been flavour of the month, probably flavour of the year. The biggest player in that market, Newcrest, buy, hold or sell?
I'm going to say sell. So production is peaking next year and CapEx steps up. So even with Aussie dollar gold price at record highs, the free cash flow yield is pretty unattractive.
Okay, Catherine. Newcrest, it's always found a way to disappoint investors, but at the moment it's a darling.
Yes, actually management have been executing well. You know, production is up to 2.5 million ounces, but like Emma says, the production profile from here on is in decline. And so therefore it's a sell for us.
Okay, let's go to health insurance.
Yeah.
The CEO's brother might be at Labor, but the investors absolutely love the Livs getting back in.
Yeah.
It's been on a tear since the election.
Yes.
Buy, hold or sell, NIB Holdings.
We're going to have to say sell with this one as well. I think in terms of valuation, it's got right up there. We are concerned that hospital admission growth will start to pick up, and so therefore that will squeeze margins.
Health insurance has been a crisis, or that's what we've been hearing, but this stock's been flying. Buy, hold or sell?
Yeah, well, you wouldn't see a crisis in their profitability. I have it as a sell, like Catherine. A health insurer really should be making between 5 to 6% profit margins, and NIB are making close to 7. So we think they're over-earning, and then you're paying 24 times for those elevated earnings. So it's effectively a government subsidised industry, and so that over-earning is a risk for them.
Okay, it's been a drought. We've heard about it for a couple of years. It's not going to change this year. Graincorp, it's bounced. Buy, hold or sell?
Oh, this is a hold for us. We like demergers, so I wish it was a buy, but I think this is a demerger that's in the price. I think the malts business will be able to sustain a higher multiple, but we just can't get any upside to the current share price.
Demerger get you excited, Kath?
Well, yes, we're leaning to a buy. I think people like the move to craft beers. Consumers are moving in terms of craft beer. So we can see that trend as a positive for the business going forward. But this is clearly, like Emma says, a special situation. It's been subject to takeover. It's now going through a demerger, but we just see that there is value there. So we still would go with a buy on that one.
Okay, we've got reporting season coming up. Is there a stock that you can pick out of the pack to tell us it's going to do well?
We like Treasury Wines, Matthew. We especially like the fact that they've just reported their US wine sales for June, which were better than expected, and for the first time have shown us that their strategy in the US, where their new distribution strategy is working. So we really like that one. It's trading at 21 times, and we think the earnings growth will be double digit for the next few years.
Emma, something there that you've looked through all your stocks and said, well, that one's going to do well for me this reporting period, and you're quite excited about?
Yeah, so we like Origin into the result. We're expecting debt to come down, strong cash flows from APLNG, and then I guess importantly, they'll be outlining their future dividend policy. So we think they can sustain a 60 to 70% dividend payout ratio. So once they reinstate that properly, it gives an easier tool for investors to sort of value that versus the rest of the market. So we think that's about a 6 to 8% dividend yield at current share prices. So that's one that we like.
Just because the stocks have done well previously, value is in the eye of the beholder, and be careful going forward.